Tattooed Chef stock review. So in this video, guys, we're going to talk about Tattooed Chef, one of the fastest growing plant-based companies that I've seen for quite some time. So the ticker symbol is TTCF and it's currently trading at around $17. To give you guys a quick rundown on the company, the CEO is Salvatore Giletti. He's one of the founders, and I'm not really sure why the market cap numbers are always wrong on Robinhood, but if we take a look here, we head over to Google, we can see that the market cap's just over $1 billion or so, and there's been a lot of selling off pressure ever since the company combined. So this is another SPAC IPO, special purpose acquisition company. They merged with another company to go public, and the company merged right around here, around October 14th or so, and ever since then the stock's been down. So, but the good news is that the stock is up. You know, it's up about 68%. You know, ever since SPAC announced that they were going to merge with Tattooed Chef. So let's get into it. What exactly is this company and why should you buy it? So, you guys a quick rundown and let's just head over to the website. So, Tattooed Chef. So this is a plant-based meal prep company. A little bit, it's similar to Beyond Meat. Right now, they're not really making replacement meats, or I would say plant-based meats. Most of the products here are simply kind of, I would say, ready-made meals. They have cauliflower crust cheese pizza, cauliflower mac and cheese bowl, buffalo cauliflower, Mexican-style corn, and things like that. So this company is definitely trying to profit from the transition into more plant-based foods. You guys have Netflix. You've probably seen, if you go on to Netflix and take a search for a lot of documentaries, they have a lot of documentaries on there. Things like What the Health, Forks Over Knives. There's quite a few documentaries on there if you just take a search, and you'll see a lot of people kind of pushing this whole plant-based diet, saying that it's more healthier and you have more longevity and things like that. And the majority of the foods here are mostly vegan as well. So for you guys out there, vegetarian or vegans, you will definitely enjoy this stock as well. It's kind of a way to invest in a similar lifestyle that you have. So here's actually the Tattooed Chef. So the whole premise behind this is that the company is run by this lady's father. So he got an inspiration for the Tattooed Chef brand through his daughter. His daughter's a chef, and she is, as you can see here on the logo, that's her. So basically, really interesting company here. But let's obviously we'll take a look at some of the products. So let's dig into actually what they're selling. So they just recently launched their e-commerce store back just after they went IPO via the SPAC. So if we take a look at their shop, we can click here. Now they also sell their products in Sam's Club, Walmart, and Target. So you can actually buy these products in major grocery stores as well as online. So we take a look here. Now this is actually built using Shopify, a Shopify store. So the ticker symbol for a Shopify stock, for you guys that are interested in investing in the growing e-commerce business, that ticker symbol is SHOP. And this is a basic Shopify store where they're basically selling their products direct to the customer. So the company just basically seen an explosion in sales, and that's been evidenced by their latest quarterly report. So we're looking at their first quarterly report as a publicly traded company. As you can see here, they say the president, Sam Giletti, it's kind of hard to read this because the font's kind of light, but hopefully you can see this. So he said, our third quarter revenue marks the highest level in company history. We are pleased to achieve such a milestone in our last quarter as a private company. 2020 has been a monumental year for us, most notably with the completion of our merger with FMCI and Tattooed Chef becoming a public company. We continue to drive the top line growth based on the ongoing success of our key club customers, expansion in new and existing retail customers, our direct-to-consumer e-commerce site. So let's dig into the numbers a little bit. The company's doing pretty well, I would say, for a smaller company with just a market cap of $1 billion. They had revenue of $41 million in the third quarter. That's a 65% increase on the prior year. And the product branded revenue, which you saw, was kind of the stuff that they're selling through their e-commerce store and through Target and Walmart. That was a 288% increase. So there's definitely some demand for their products. And through the first 9 months, the company's done $108 million in revenue. That's up 87% on the year. So right now, this company is actually not profitable. What we're looking at is basically a shift in consumer eating habits. And with these pre-ready meals for people that are vegan and vegetarian, it really does save a lot of time. You know, a lot of people are very busy. They're taking care of kids, they're working jobs, they're going to school. They don't have time for meal prep. And meal prep is one of the most important things for you guys out there. If you want to eat healthy and you want to kind of avoid eating so much fast food, you're going to have to prepare your own meals at home. So this company is kind of helping a lot of busy professionals and busy moms and just busy people in general, kind of doing it for you and allowing you to save time. So what are the projections for this company? Well, I'm going to get into that a little bit later, but this company has projected a lot of future revenue, and after completing the SPAT, they're holding around $95 million in cash with only an outstanding balance of around $5 million. So basically, this company is almost debt-free, tons of cash, growing sales, but I want to show you guys a little bit more on the company presentation, so let's get into it. So you can actually find all of this information at ir.tattooedchef.com. So as I was saying, this is the CEO, and this is his daughter. So they kind of teamed up to put together a company, and then they've brought on some other people as well. So let's talk about those future projections. They're projecting $222 million in sales with a compounded annual growth rate of sales over 67% in the $55 billion U.S. frozen food market. So very good numbers here, and you know, I took a look at the presentation. It looks pretty cool. As you can see here, the projected growth revenue is just up, and that's what we want to see when we're looking at stocks that aren't generating a profit. Usually these stocks are going to trade on their revenue. So in the long run, you know, Tattooed Chef, it looks very interesting. And here's the story of how the company kind of got started. They started as, you know, just a regular food company, and they're kind of based out of Italy, I would say. They have two production plants, one in Italy and one in California. And this company is just coming together and trying to make a name for themselves in the niche. As you can see here, they talk about growth and just overall growth and just how people's diet tastes are kind of changing. So to give you guys some more information on what I think this company can do, let's take a look at their revenue. So the majority of their revenue obviously comes from pre-ready meals, but also comes from smoothie bowls. So right now they have a pretty diverse product line, lots of different products depending on your taste. And it'd be really interesting. I would like to definitely try some of their products. I've read some of the reviews, and a lot of people say that the products taste great. So obviously that's why they're seeing a big bump in revenue. And of course they've gotten lots of interest from big companies like Costco, Sam's Club, and Walmart. And customers say they really enjoy the food. So reading some of the reviews says, great healthy treat. These bowls are amazing. A great healthy treat. I already have recommended to so many people. Sam's Club, please keep them off the shelf. So good, you know, good revenue growth, good reviews. And a lot of times when people buy products like this, they're going to continue going back to the grocery store. And it's kind of the similar type of play that you'll see with a Beyond Meat. So as you can see here, just a couple more things. Here's a look at their plants. They've got a production plant in Italy and a production in Paramount, California. So this is a pretty solid company, I would say, with plenty of future sales growth and things like that. Here we go, 100% year over year net sales growth projections, and net 100% year over year growth in Q1 versus Q17. So obviously a lot of these products are flying off the shelves due to the whole pandemic situation. More people are eating at home. They're not really eating out as much. So this company has really benefited from that transition. And as you can see here, here's a breakdown of the ownership. This was before the SPAT happened. The majority of the ownership, you know, for Tattooed Chef shareholders and then public shareholders. And then that's how they came together. They raised money through the SPAT, and now the company is public. So now let's talk a little bit more about why I think that this company is similar to Beyond Meat. Well, if we take a look at the comparison here, we can see that Beyond Meat was dealing with about 55% compounded annual sales growth, and Tattooed Chef was actually outperforming them at 61%. So, you know, Beyond Meat has been one of the most controversial stocks out there as of late. A lot of people have been buying it, and then they had a struggling sales growth, and the stock plummeted. So I think this is one of the reasons why Tattooed Chef stock is down as well. It's kind of trading in cohorts with Beyond Meat. You know, usually with stocks in a similar sector or industry, they usually trade together. So, but overall, the company seems like it's pretty cheap based on its revenue multiples. It seems like Beyond Meat is grossly overvalued. And from a fundamental standpoint, I think that this is a decent long-term hold, but there could be some headwinds, in the near term due to the whole pandemic situation. So, why the pandemic situation would affect a company like this? Well, obviously, more and more people are eating at home, but you're competing with things like Uber Eats. You're competing with people that are not buying these ready-made meals; they're buying their own ingredients themselves. And overall, more enhanced lockdowns won't really help sales like this. You want things to be open so people can go to the grocery store and shop freely. So now I'm going to give you guys my future price projection on this company. I think if you're looking to trade, like for instance, if you're looking to trade options on a stock, you're looking to flip a stock, you definitely want to look towards renewable energy stocks, digitized stocks like Zoom, Netflix, things like that are going to basically be benefiting from the enhanced lockdowns that we're going to be seeing in the winter time and things like that. This company, since Beyond Meat had such a bad quarter, this company is probably going to continue going down, and you can probably get the stock cheaper, I would assume. So I would say if you're looking to build a position over the long term, the stock is already down 32% this month. I think you can continue to wait. Perhaps the stock will come a lot closer to the original $10 price. I would say perhaps even $15 or below would be a good entry point for me. But I like the long-term growth prospects of this company. This isn't like some revolutionary new type of technology or anything like that. They're just simply selling pre-made frozen food. So obviously you're not going to see huge growth like you would with electric car stocks or Zoom or something like that. But this could just be a company that just slowly over time grows in value. And you've seen, companies like this as well. This is more of kind of a consumer staples type business where it's going to grow much slower. So I would say if you're interested in investing in kind of the future of plant-based foods, if you're patient and you're willing to hold a company for a long run, it's going to take time for the company to continue generating sales. It's not like people are rushing out to get this product. It's just another option in a crowded supermarket. I think it's a decent long-term hold. But right now, I think you can get it cheaper. I would probably wait till about $15 or so before I got an entry point. There looks like there's plenty of support at around $15 to $13, and at around $17 or so, it just looks like the stock is going to continue to head down some more. So I wouldn't quite pull the trigger on it. I would definitely be a little bit patient with this. And the reason why I say this is to kind of go into a more technical analysis in depth. If we just open up Robinhood using the 20-day moving average, we can see that the stock has crossed below the 20-day moving average. So that's definitely a bearish signal showing that there's more selling pressure going on in the company. So you could probably get these shares a lot cheaper. I would probably be more interested right in the $14 to $15 range. So that's kind of my technical analysis on this company. To wrap things up, guys, I like the company long term, but this is definitely going to be another long-term hold, just like I mentioned in a previous video with Fisker stock. This is a 1 to 2 year stock. I think there's better plays in the renewable energy market if you want to make some quick gains. So I hope you enjoyed this video, guys. I hope it gave you guys a good gist and good review on Tattooed Chef. Very interesting company.